We're focused on financial statements as they are prepared by accountants. However, accounting statements are designed primarily for use by creditors and tax collectors, not for managers and stock analysts. Therefore, corporate decision makers and security analysts often modify accounting data to meet their needs. The most important modification is the concept of free cash flow. That is defined as the amount of cash that could be withdrawn without harming a firm's ability to operate and produce future cash flows. In terms, free cash flow is the amount of money that a company repays to its creditors and the payment of dividends to its investors. We can get the free cash flow by using this formula. It is EBIT, or the earnings before interest and taxes, multiplied by 1 minus the tax rate, or this is also known as the NOPAT, or the net operating profit after tax, which is the profit a company would generate if it had no debts and held only operating assets. Add up the depreciation and amortization less the capital expenditures, which is also the cash used to pay or purchase new fixed assets, plus the changes in the net operating working capital. Now here is an example of the financial statement of Allied Corp that we will be using in computing for the free cash flow. Okay, so we will try to solve for the free cash flow of Allied Corp. So first thing is we will solve for the NOPAT, that is again EBIT multiplied by 1 minus the tax rate. So NOPAT is equal to 283,800, that is the EBIT, multiplied by 1 minus the tax rate of 0.4 or 40%. So we have here a NOPAT of 170,280. Add up the depreciation and amortization of 100,000 minus the capital expenditures of 230,000, then add the net working capital, which is the now C, or the net operating working capital of 2018 less the now C of 2017, which is 800,000 minus 650,000. So we have here a result of a change in net operating working capital of 150,000. And we have a free cash flow of negative 109,720. Now, a negative free cash flow could not be a good sign for investors, but take note that the negative free cash flow was mainly because of the capital expenditures that the company has executed for its new processing plant, which is a form of expansion. Now, this plant could be large enough to meet its production for several years, which means that a firm won't need new plant for the next years. Now, therefore, Allied Corp's free cash flow for 2019 and in the succeeding years should increase.